Hey everybody, Paul here coming at you with a Crypto Coffee update, and as usual, I have all of the wares that you need, such as conferences, coins, news, happenings, and events in the crypto space to keep you up to date on this emerging field of digital assets. But first I need something from you, and that's a simultaneous sip. So, join me now. Coffee is wonderful. It energizes and hydrates. Alright, let's go ahead and get into some of the news of the day, and we have been experiencing a bit of downward pressure, I suppose you could say. And the largest cryptocurrency that's experiencing this downward pressure is Ethereum. Having tumbled 17%, investors are looking for a reason why this is happening. Let's explore. Ethereum has moved under $300 for the first time in 9 months, in a relatively short amount of time as well. You can see the author says that despite the fact that Ethereum has cemented itself as the leader in this flowering market, it's not left it invulnerable to devastating price crashes such as the one we've been seeing recently. Part of the justification for this price crash is the fact that many tokens are built on the Ethereum smart contract network and raised Ethereum tokens in their ICO. What this means is that when these tokens are strapped for cash and need to have some kind of liquidity to operate, they in turn can sell the Ethereum tokens they raised, causing even further downward pressure in an already bear market. This is a semi-unique situation for Ethereum, as after all, Ethereum is really just the leading smart contract network in cryptocurrency at present. Let me know below down in the comments if you would be interested in a small segment similar to last Crypto Coffee update, in which we examined a bunch of musical cryptocurrencies, detailing alternatives to the Ethereum network and alternative smart contract solutions. There are plenty of them out there, and Ethereum really is just the number one. However, despite these price declines, many investors are still saying that crypto is a better long-term investment than USD and even gold. In fact, this one investor isn't just a no-name person. It's Kim.com, the Finnish-German individual who started Mega Upload and fled to New Zealand after some legal issues. Interestingly enough, this article does have a bit of a semantic inaccuracy. It makes sense colloquially, however, there's a bit of a distinction I wanted to draw attention to. Quote, if the US dollar, for instance, can be used to purchase properties and services, it has monetary value, end quote. While it's very reasonable to say such a statement, what I wanted to point out was the difference between money and currency. The US dollar may have currency value and market value, but monetary value, perhaps not so much. Mike Maloney has a fantastic series called The Hidden Secrets of Money, in which he explores the differences between money and currency. And the differences may surprise you. I'll put a link below in the description. The author also expresses some skepticism, saying such a drastic situation such as hyperinflation may never occur for a major economy like the United States. However, Kim.com pushed back, saying that the current household debt in the United States is around $845,000 per family, with unfunded liabilities about $938,000. So, with the average US family on the hook for over $1 million worth of debt, it's not unreasonable to think, as Kim.com says, anyone who thinks the US debt could be solved with economic growth, new debt, or printing more dollars is, kinda harsh words, an idiot. The US empire will default. And here's a historical picture to help drive home this precedent. This is a picture from Weimar, Germany in the 1920s, in which wheelbarrows became wallets, and individuals had to use bricks of money similar to today's situation in Venezuela to purchase goods and services. This quickly spiraled out of control, and a new currency had to be issued with a new base. I'll also put a link to this article below in the description, Fiat Currency, Using the Past to See into the Future. It gives a great historical demonstration of fiat currencies we've seen in the past, dating all the way back to hundreds of years ago. It's not a new phenomenon. And while major economies like the United States have yet to see major hyperinflation in our lifetimes, mid-tier and emerging market economies are indeed starting to feel the pressure. Venezuela and Argentina may immediately come to mind. However, nations like Iran and Turkey are now beginning to feel the pressure as well, as Turkish citizens flock to Bitcoin as the local currency plummets relative to the US dollar. Turkish exchanges have seen a huge spike in volume, one exchange up 63% and another up 100% in just 24 hours. Turkish citizens are looking for a way to hedge their wealth against falling local currencies, and they can reasonably use online currencies pretty comfortably given that Turkey has not issued a cryptocurrency ban. This is different from Iran, in which cryptocurrencies were specifically outlawed, so this may help to explain the sudden and stark increase in trading volume. The initial intensity of this collapse is really difficult to overstate, given that tariffs on steel and aluminum have doubled from the United States, leading to a massive 20% drop in the lira, positioning it about 45% down since the start of the year. With such a stark drop, it's little wonder why individuals are fleeing from a fiat currency that can be endlessly devalued into a digital asset that is decentralized, easy to move around, and fungible. However, these volatile price moves definitely serve the interest of some individuals, even if it's just a small group at the top. The powers that be have a vested interest in assuring that they themselves get the best entry points and the lion's share of this new emerging form of money. And this is evident from the fact that the mainstream media channels have been pushing horrible trades with seeming impunity for the last year or so. And this has the potential to sully the idea of cryptocurrencies for many individuals who perhaps are failing to do an adequate amount of their own research and just listening to these mainstream channels. You can see Ripple's XRP is down 90% since CNBC's infamous buying tutorial. It was a not very well-timed tutorial, and we're going to go ahead and explore just how dicey it was. CNBC Fast Money host Brian Kelly made the call to buy Ripple at $2.57, absolutely nosebleed valuations retrospectively. If that wasn't embarrassing enough, Kelly dropped some strangely bullish comments at such high valuations, saying, "I've bought all that Ripple, that's how easy and fast it is," and in an accompanying article said, "If you thought Bitcoin was hot, maybe you should learn about XRP." Definitely not a good look retrospectively, and given the fact that millions of Americans watch this program, it's definitely worrisome that somebody who's lauded as a financial expert could make such a horrible, horrible call and still have some shred of credulity left, especially given that these segments haven't stopped. You can see XRP has dropped to 25.7 cents, leaving individuals who took Kelly's advice in the moment to lose more than 90%, and similar segments are continuing to run, with individuals shilling for coins including Bitcoin Cash and, assumingly, XRP all over again. This can serve as a fantastic reminder as to why it's just so important to do your own research. Even if you have individuals who you trust and channels that you know are trustworthy, it's nonetheless important to remember that you are the individual responsible for executing the trades for your own portfolio, and nothing is going to replace the due diligence that you do for the projects that you invest in. And if you happen to find a project that you're unsure about or just want to discuss, feel free to jump into the Cryptide Discord. We're always talking about various happenings and projects in the space, and who knows, having an extra set of eyes could very well be the difference between a 10x or a crash to zero. So do your own research and remain vigilant out there. With that said, let's go ahead and get into the happenings of the day for August 15th, Wednesday. There's a high-caliber university conference happening in Calgary, Alberta, called the Selected Areas in Cryptography Conference, and like I said, going on at a university, so going to be some heady stuff. Moving on to August 16th, Thursday, the Token Match San Francisco meetup is happening, Bitcoin Day MX is kicking off in Mexico, and Blockonomic Blockchain Econ Summit is happening in Malaysia. That's it for Thursday, August 16th, and for this Crypto Coffee update, links below in the description. After all, sharing is caring, and you gotta cite your sources. So keep an eye on that. There are plenty of good projects, just not enough time to talk about all of them, so you don't want to miss something that may be going on with some of your favorites. And thank you so much for watching. Your support is so critical, and just dropping us a like on Viewly, on YouTube, and letting us know you're there, you care, and if you feel so inclined, dropping us a comment really does mean the world. Helps keep us going, and it gives me an idea of what kind of content you guys want to see in the future. So with that said, thanks again. My name is Paul, signing off. We are Cryptide, and remember the tide is rising. But only after low tide.